What the fuck is up? Um, 6.7k February and plus 20k now on the year, including March. These 6k weeks are starting to become more regular. 20k this year, 66k last year, 87k in the last 15 months. We're getting to that $100,000 profit milestone. And when I first started out making these videos 4 years ago, that was never going to happen. It is beyond my wildest dreams to even be near 100k in the markets, and I'm proud because, like, and I've said it on Twitter a lot, but like that Tim Sykes ad has literally changed my life. It's unbelievable. It's crazy, but like me telling you that's not going to help you, and I always try and make these videos not just about me but about you. So, a couple of things. I'm going to post this video on Twitter, the link. I'll pin it at the top of my profile, and I'll leave a link to my Twitter profile. Retweet it, and one or two of the people who retweet it, I'm going to give a free, like, 1 hour lesson to, because I feel like I've said, live the dream, we will not fail, and then it's no good me just making it and then not pulling other people up. So while these videos are free content for everyone to rise together, I want to try and do it personally with a few people as well. So retweet the tweet on my pinned Twitter, and that will go live. And the other thing is to say that you think once you've made 100k, you'd made it. You know what you're doing. Like, you've got your system. And I haven't. Like, that wall's going to be a stocks to trade wall of all charts. And my risk management has been terrible. Like, there's a problem where I see a lot of people, and I know a lot of people on Twitter that make a lot of money, and then that gets to my ego, then I want to make the profits, and then I do make the profits, but it fucks up my process. So the main lesson that I want you guys to take away is that it's always about process, and it's always about risk management. It's no matter how much data you track, it doesn't excuse poor risk management. Risk management is in cutting losses is just fucking everything. So in relation to that annual perspective, running really well, kind of doubling each month. This month was red, and it's turning out to be the best month of the year. Nice to have picked up 20k straight away at the start of the year, not without its hiccups though. And it's all about just kind of hitting that 100k. We're like 86 and a half trading in the last 2 years. Well, last year in 3 months, 86k. But it's just about exponentially getting to this point faster. And I was on a $500 account last year, so that's a big difference. So we've kind of made a third of the year up already. It's just about, like I say, getting where I want to be faster. The video will be split into three themes. It's business as usual, making money, risk management in this process here, and then kind of getting back on track for a nice 3.3, and then that was followed by like nearly a 5k week this month. So there's a lot of like one and done gap craps, kind of light volume. You guys, there's a 5 hour guide on this shit, but it's because the pattern just repeats and repeats and repeats, just gap crap, gap crap, gap crap, and then if it's gonna gap and crap on 160 million with way less demand on this day, just like the 70 million, it's just you just kind of have a good feel that it's just not going to be able to run, because it's just going to get exhausted trying to get to these levels when people know it's previously failed at these levels. And in RX, no different. It's like you're like 90% sure, 95% sure that it's going to fail. It's just a question of when. So, with MBRX, I was a bit disappointed with how I traded it, because I was in early and I should have really definitely cut this 6, because it's so easy to just think this type of stock, they will all fail. And with this level of volume, they will fail. And they will. But that doesn't excuse you from kind of cutting your losses. It's not necessary to lose from the 670s to the 9s. It's not necessary to lose that. You should lose. An article came out and this ripped in seconds, but you shouldn't be. You should absolutely be cutting your losses in the 8s, and then just let it work itself out. Like, let's see how good this news is. Let's see how much volume comes in, and then when you're getting this kind of double top, it's topping out. There's no harm, and this is really what I'm trying to do is just trade more from a call. So I might be involved somewhere in here. It didn't work. Take it off. When the double top starts rolling over, take the short, risk over and under the 930s, and then instead of like chasing it down and chasing it up, like just have a short in the 915s, risking over and under the 915s, and then yeah, like when there's no harm taking a bit off, like taking some of your size off because you've got a sizable wash there, and then there's no harm building back in because you're kind of playing with profits and your risk stays the same. And that's how I would have, how I'm trying to approach stocks like MBRX moving forward, because it's ultimately the same with AREC. I mean, when you look at AREC, it's like, yeah, I mean, it's this type of setup, like I've tracked it over a few years and like 90+% of them fail. But there's no saying that news can't come out, or volume out of nowhere comes in, or Ross Cameron jumps in and just fucks it all. So like, yeah, I'm like shorting any pops, covering any dips, shorting out any pops, covering any dips, but knowing that the overall picture is on my side. But again, I just like the next week I started taking some really big unrealized losses. So the strategy, well, it works 95% of the time, and like it almost works 100% of the time on these lower volume stocks, but it's just maintaining discipline everywhere in the game, because if you don't, it'll start slipping on quieter days. Then you find yourself in a 300 million volume stock with the trading it the same way as you trading a 50 million stock, and then that's just it's a whole different game. So it's kind of, you've got to have rules for both, even though you will ultimately, I can't see you ever really losing by having a looser strategy with the extremely bearish stocks. But I think you need to maintain a system all the way, because like, again, like shorting these kind of pops, risking these pops, it pushed through and held. So like, I don't mind it covering the 390s. I don't think you need to kind of ride this up and hold the 420s. I don't mind being short this, getting stopped out, and then when that kind of cracks, building back in with risk on high of day, and like you lose once, right? And that's okay. But this, I think you'll not get stopped out on it. It pops up just for a second, and it doesn't really break your risk. It doesn't hold over and under. And then you've got a nice short from like the fours down to the 330s, 340s. You've got 60 cents. And for sure you're building into a winner and shorting this on the way down. So business as usual in the initial week, making money, but I think I was just, the learning is like I had a really bad habit of like when stuff goes wrong or stuff goes against us, just half size, half size. So like I'm down to a quarter size and I'll write it up. But why am I just losing money unnecessarily, like writing up half size red? Why not just get out the trade altogether, cut the loss, think objectively, and then maybe attack later? So you likely can, these 30 million, 40 million stocks, if you know what you're looking for and you know the nuances for the ones that run, you will, for a period of potentially years, get away with being aggressive, adding to the pushes on bearish setups, like being aggressive, being bullish on bearish setups, or being aggressive on bearish setups, and being bearish on bullish setups. I mean, this is something I mentioned in the guide a lot of times. It's true, be aggressive on bearish setups, be bearish on bullish setups, and this is extremely, despite making about 8 to 10k on this multi-day gap pattern where you get the overextension after the first green day, made a shitload of money on this, because once the panic and there's no demand, it all fall. The mistake with this is there was demand, there was huge demand, like we're talking a billion shares, and that's the trouble that I have, where I need to maintain good discipline on the very bearish setups, even though I know you can get away with it. I need to maintain discipline on them, because the once the discipline starts to drop, it comes into setups like this, and OCGN was traded terrible. I mean, if we kind of try and really look, adding on the first leg, let it run, to be fair, and didn't add, cover the dip. But then the problem was I thought it was done here, and again, like I didn't add here, like I let it overextend, and then I put real size on in the 18s, 19s, and then it fell apart, and worked out. So like by not adding here, I was able to add up here. So like just to kind of draw that out, by not adding in this area, I was able to add up here, but it's just not acceptable. I mean, no matter how you look at it, I'm losing literally from about the 11s up to the 18s. Like, why am I losing $7 a share? And the reality is, I don't mind, like, first of all, 7 million in the opening minute, 40 million pre-market volume. It's almost an absolute definite no-go. The premise of the strategy is that it's gapped up too much. There's not enough volume the next day to keep it up, and it collapses. And once it collapses, it's just nothing but air because it gapped up overnight. It like skipped up on air. So the strategy doesn't work when there's too much volume. So that being said, the strategy doesn't work with this volume. That said, if you have to fucking take a stab, which you shouldn't, but I'm just saying hypothetically, 1070s, you risk 30 cents. First sign of weakness, first red candle, you get stopped out. With these, the only way to play them, because they do ultimately like give a lot back. So if you can catch it somewhere near the top, like is this shown as 3? It wasn't 3. It was, they've done some sort of reverse split or something. But if you can catch near the top in the 17s, you know that like the next day. I mean, I don't know what that is in comparison, but based on this split chart, it's like 3 to 2, like 180, 190, like it's 40%. So the ideal way to play it is to not play it in the morning because there's too much volume. And if you can just wait, let it parabolic, let it extend. You don't know at this point whether this is going higher, it does go higher. But then this for me is like kind of a definite trend change. We've got this trend change here. I think this could still rip up on you. You need a, like on a chart like this that's this bullish, you need clear confirmation of a trend change. I think this decent drop is an opportunity where you can say, look, I've got stopped out for 30 cents. So I'm now going to take smaller size because I've got wider risk, 17.10 risking 18.80. So you've got like a $1.50 risk, but we actually after hours get the 13. So like to risk a $1.50, you get even lower the next day. It's like you're going to make 17 down to 14. So it's like a 2-to-1 trade. But you can add to your winner, and when you think about it, you've got this big dip where you're covering all the way down, then you've got a pop trading around the corner, 16s, that gets covered into the next wash. So OCGN, I just got into a habit of playing bullish setups the way I play bearish setups, and this is where it all went wrong. And then with AUVI, it's like, oh yeah, it's a gap crap, right? It's like it's traded 16 mil volume, it collapsed. So if it trades at 16, 17, 18 million again, it's going to collapse. Problem is, it traded 120 million. So when it trades enough volume to exhaust anyone who's underwater and to like give longs confidence that like, yeah, like no long's going to buy this thing. And well, last time it traded 18 million or whatever, it failed. So like this is going to have to trade a lot more than 18 million. Otherwise, it's going to fail again. Like longs need confidence, and 100 million's plenty confidence. So with AUVI, it was very illiquid, and I think I've made this mistake quite a lot of times before. Like the volume pattern changes intraday, so I'm thinking this is trading like it traded on this day, and the volume is symbolic of how it traded on this day. But with it, and it's true. Like we've got like nothing pre-market. We've got like 320,000, and again, this is why you really need to have your risk levels, because this is trading like it's gonna fail. So that being said, I mean, I'm not sure how much it's up at this point, but a short here, don't mind. But you've got to think like, where's your risk? So if I'm shorting here, I'm risking that pretty well. You're shorting into a halt, so you wouldn't be able to say I'm shorting in the 950s and it goes straight into a halt. Like the halt is your risk. Like when that pushes up from the halt, you're out. Like you've unfortunately somehow shorted into a halt. So like if you shorted 960, you're out in the tens. You've lost 40 cents. It's one of those things. But you don't get stuck in this. Like you're not losing when it goes from 10 to 20. Like you're not risking $10 of exposure, and then ultimately when we start getting the first halt down, like again, like it's not a terrible short to like short the to presume this is over because it is like a one and done stock generally. But like short in the 1960s, risking 22, it's $3, so it's small size, but it gives you the power to add to your winner, right? You lose again, right? So, but it's fine. Like you're losing $1.50, and your risk respected that. And the way I traded this was just like add all the way up, cover when I can, add on the way up, cover when I can. This was just holding and hoping. By 35, I was like a couple of bucks away from blowing up. Like that's if I lost, I think I had about a 30 grand account. So if I lost 30 grand, we're talking I'm only up like not far off 90. So lost 30%, like 35% of everything I've ever made just on one trade. Like it's terrible discipline. And it just gets back to the point where you play in the overall picture as well, and that volume doesn't match that strategy. This volume did match the strategy, but once a million a minute comes in, it only traded 20 million when it crapped you. If it's trading a million a minute, it's obviously going to be more than the 20 million. It's going to be more than this 20 million day. It's going to be 100 plus million day, and it was 120. When it's 120 million day, it's a different stock. I know people are shorting this because of this day. Yeah, it's basically like you got stuck on the halt, you get out, and like like I don't mind trying to catch the backside. I don't mind shorting around here, getting stopped out, shorting up here, and then actually this time it goes from 33 to 16. So like it's a profitable trade if you just respect your risk. And I think it was after like these two scares, like I literally went down like $15,000 once. Because usually I was always able to cut at 5,000, and then once I'd had a 6K week, I was just like, well, I can lose 5,000 and I can make it back in a week. So then I nearly lost 15, then I nearly lost 28, and after that I was like, right, I put together a loss journal. I wrote down every entry, and I was like, look, you need to have a max loss of like $250, and every single chart, bullish or bearish, whatever the data says, I thought that I could, through tracking so much data, I thought I could like maybe not have to have as good risk management because I could predict exactly what the stock would do. But it's just not the case. You just need good risk management. So I really started playing a risk first strategy. Like, what's your risk? And I used to do this, like, and I was really good, and I had 1% risk, but I made a lot of money and got sloppy. So now I'm back to like risk strategy, and OBSV, we can see I took this trade in the 440s, 450s. It's a long. Risk in VWAP was like $600, really good long. Adding to the winner, changing risk as I go, but with OBSV it was felt obvious. The last time it broke out, it had a really big gap. It's consolidated a lot, and then we've just got this nice breakout, multi-week breakout, and I don't really like this breakout because it's too overextended. But when it's like really looking for the second leg after like a month of consolidation, and it's in a pretty tight range, like I really like this 450 break, and we can draw it on the chart. So we've got like roughly, it obviously failed and then this is perfect as well because it's consolidated on the daily hugely, and it failed in the morning and then consolidated all afternoon. So when we get this break, I really don't mind taking a 450 break. VWAP's roughly around the 440s. I've got like a 10-cent risk, and then I'm obviously just adding on the way up. But as I add on the way up, then your risk is changing. You maybe then risking this line and not VWAP, or you're risking your original entry, or then you risking this line and then you're risking this line. And as you add, and as it happened, I sold the top. It was a super good trade. But Rito is maybe a better example of on the short side of how I kind of changed that strategy. So with Rito, I don't think I have the. Oh, here it is. Cool. So with Rito, you can see a very much cleaner way of trading where I'm not. It's 52 week highs, but it's got a history of like gap crap, one and dones, but it is like a 52 week high break, so I'm a bit more cautious. So I'm not just letting I'm not just letting this rip up and just thinking, all right, I'll add and then cover the dips, get my position down, then add the next leg. It's not really like that anymore. It's let the chart establish a risk for you, because you don't know how high it can go. Like, yes, I would have got a better entry in the 360s, but it could have gone to the fours. So let it fail, establish a temporary risk level. So I've got 325 short, risking 360, 30 cents. Ultimately, it's like a 10% risk, which is fine. Like, adjust your size appropriately, and then covering down in the 250s. So like I've risked 30 cents, but I've made like 65. So it's just just it's 2 to 1. So like it's two things. It's like, as a stock retail, like what is the percentage of chance that it'll fail? Well, I'd say 50-50 at this point. Pre-market it's 50-50. But when it slams like this, I would say 70% of the time it's not going to come back. Like 1.1 million, yeah, it's squeezed, but that slam after that squeeze is generally saying it's not going to run. And then when you look at the one and done chart, the history of the gap and craps, we're not in a hot sector. Like, I'm willing to say it's more likely than not, after this rejection, it's not going to come back. So then taking any kind of shorts in the 330s after the rejection, risking the 360s, the risk reward is there. You've got like more than evens. Let's see, you've got 2 to 1. You've got from 330 down to the 230s. So you've got like 3 to 1 risk reward, if not more. And after that slam, I'd say more likely than not, this will never come back, which just makes it a great trade. Like, it's probability. More likely than not to happen, and the risk reward is more than you're investing. So it's a fucking trade that you can do with huge size. But for me, I'm at the point of getting better at establishing risk, getting better at letting the charts really identify a good level to risk off, and not just finding the top through intuition and data. Like, it's good. Like, the data tells me what setup to be in, and it tells us when it's going to top. But I still think you should let, every trade is different, so you should let each trade, each chart, tell you it is now safe to enter. Like, your data says here, we've had the rejection here, it is now established a risk of here. This is the perfect trade. But in like, again, like on the bearish setups, like you could do it, but it's the fact that reducing discipline in one area allows it to be reduced in another, sadly. So you've just got to enforce good discipline all the time, because it's got to always be about process, not profits. It's got to be. And sadly, I know a lot of people who make a lot of money in the markets, and I see them making more and more and more. And naturally and competitively, I want to get there. And I know how to make the money, and I see the setups, but somewhere along and then I do make the money, and then somewhere along the line, it just becomes about profit, not process. And look, I'm at a point in life now. You guys saw us like 4 years ago. I was broke. Now I'm at a very comfortable point in life, and like I say, I've got apartment cash. Like, I've got money in the bank. Like, I don't need anything else. So like, my life is not going to be substantially better by making an extra couple of thousand a month. Like, so really, I should just be focusing on the process, because I don't even need the profits. Like, I make enough money from the stock market. I make more than enough money from the stock market. Like, 5, 10, 12,000 is more than enough money in the market. So like, why not just trade the processes, and ultimately you'll get the profits down the line anyway, and you'll do it safer, and you'll be able to scale up way more than this aggressive, than compromising discipline now only to lose later. Thank you so much for watching. And I just wanted to add while I remember, I've got a link for Trade Zero below. I am an affiliate. I get paid if you do sign up. But the market, well, longs have really enjoyed crazy runs. The market is just not like that anymore, and it favors shorts. So if you are looking for a good broker to short, maybe you've got a smaller account, Trade Zero will let you short access to the hard to borrow stocks, and through my link I have like cheaper, everything is cheaper basically. So I've left that link below, but I just want to leave on a kind of a recap of the whole journey so far, and this will never end. There'll be videos forever. I've always said forever, and there will be forever, and I love doing them. The dream is real, and you don't need to make hundreds of thousands. Like I've made 80,000 plus a full-time job, and then I've been saving from my job because I'm never out, because I'm studying all the time, that all of a sudden you've got £100,000 or £120,000, and then you're like, well, what do I do with this money? Because I've made this stock trading money, and then I've been saving, and then you can like look, I don't have a mortgage. It's not just about trading profits. It's about the overall discipline and the big picture thought process that that can radically change your life. I mean, I'm as wild as they come. I'm having a beer right now, having a beer on the weekend, and it's like, I've always been like kind of crazy. I've always had terrible discipline, but if you just like work on your discipline in certain areas, like work on your discipline in trading, and then commit those 2 to 3 hours a day, you will get it. Like it's about like being a fucking dog with a bone where you won't let it go no matter what. It's about you putting in those 2 to 3 hours, 4 hours, 5 hours, but at least 2 to 3 hours a day with some really proactive like data tracking, organizing your charts, like saving all of your charts, like watching the challenge webinars or reviewing the old pro stuff. Like as long as you're doing 3 to 4 hours a day or 2 to 3 hours a day every day, and you don't stop for like 3 fucking years, it's gonna get to the point where like, because for me it's like I'm almost at the point where I don't know how to not make money, because I just look at it and I'm like, that's gonna fall, or that's gonna go. Like I can just see it. Yet I spent 3 years watching webinars and tracking data, thinking I don't remember anything from the last 2 hours of what I watched, and that was with it fucking. I was working fucking 9 till 1 a.m., 9 till 2 a.m. some days in advertising, and I was still getting a couple of hours in, or if I worked like 24 hours in one day, I do double hours the next day. You don't have to be that smart to be in trading. Like, yeah, I was in poker, and like, yeah, I made some money in poker, and yes, I've maybe got a bit of a head for probable gambling, but I would put it down to more of an obsession than being naturally good at it. And I don't think I'm naturally good at it at all. I think this is pure determination. I think Jack Kellogg's naturally good at it. Honestly, I think he works hard as fuck, but and again, like even with Jack, like he fucking pushes himself beyond the realms of how hard you should push yourself from the conversations I've had. I don't want to quote him, but just do the fucking work and it'll come. Envisage like life coach Sam, who I work with all the time, I'll put his link as well. Like envisage it, like have a vision of like my vision is like I'm fucking in Brazil in 1 year, beautiful blonde girl, tanned. She fucking loves me. Like she just fucking loves us. Like she loves everything about me. She's like, love your smile, love your teeth. You've got nice hair even though you're 33. Like she's just like wants to be us. Like she just wants us to like hold hands and neck on. Like and she when I hold her hand, she gets a little thrill of electricity, like a spark. And like I get that spark as well. And we're like overlooking the mountains in Rio de Janeiro and saying like, I love you and you love me and we love each other. And like I don't have to work today. Do you know what I mean? Like I sit and meditate every day and have a vision of the future. And last year I had a vision that this year would happen, and now I'm sitting in that reality. And this year I'm seeing myself in Brazil, and that'll probably happen. But you've got to work hard. You've got to stay focused, stay connected to the dream, and you've got to put the 2 to 3 hours of work in every day. And I'm waffling, so that's the end. But comment vision below, retweet that Twitter thing, and just I'm really really grateful if you followed us from day one. Like just write like day one on Twitter, on YouTube as well, because I just love to see those people who've been there from the start and like, look, like I'm fucking stupid sometimes. If I can do it, you can do it.